Good evening and welcome back to another episode of Market Outlook. As we always say, this is a video for educational purpose and this is not considered, should not be considered as any type of recommendation for buy or sell. Anything what is mentioned in the video is just for your academic interest and you should consult your financial advisor before taking any action based on what we discuss in this video. Since I'm having some bandwidth issue, I'm not sharing my video today, but let's not much time and get into the content. So as you all know, we had a bad week from March 9 to 13th, where Nifty had lost around 1300 points and Bank Nifty had lost around 4000 odd points. So I have been mentioning that we had the solar eclipse, which was on 17th of February. And if you know, or if you have noticed, from the low of solar eclipse, Nifty has fallen close to around 2,600 points. And any guesses on Bank Nifty? Bank Nifty is approximately 2.5 times, 7,300 points fall Bank Nifty had from the solar eclipse date. So those who have learned the Astro Finance based course and people who are learning now, they will be aware of this fall and the reasons and how to capitalize on such kind of scenario. So recently we had an Astro date, which is on 16th of March, where we had the Mercury and Mars conjunction. Okay, so for 16, 17, and 18, that is last week, Monday, Tuesday, Wednesday, Nifty has been in green color, closed on the higher side, and all 3 days we had the green candles. Once the effect was over, okay, we had a fall. So in the 3 days, Monday to Wednesday, Nifty made close to around 900 points from the previous low, and Bank Nifty made close to 2000 points plus. And all these, whatever gains that it was gained on Monday, Tuesday, and Wednesday was given out on or given back on the last 2 days, that is Thursday and Friday. So for those of you who have attended the basic course, you can remember, I guess, the anniversary date we have on March 20th, 21st. That is based on the equinox, which we call it as also the quarter date. And we will have to wait and see in the next coming days whether we are in for more trouble or not. If by any chance the low is broken, the low of Friday, that is March 20th, is broken, and then we are not seeing any signs of reversal in the at least by first week of April, we are in for deeper correction. So no long positional trades, not for investing. I'm saying just based for the positional traders. Okay, no long positional trades. Just keep your cool, sit with money, and see what will be the impact of how is the market reacting. Okay, so this is just an overview. And one more point, just to remember, just always remember this. If the trend is downside, okay, that is if you are in a downtrend and if you happen to see a pullback, always remember that the pullback top will be made on a Wednesday. That is exactly what happened on 18, that is last week, 16, 17, 18. After the fall the previous week, which ended on March 13, we had a pullback and the pullback high was made on Wednesday. And on Thursday and Friday, the market went down again. And the opposite also holds true. So what I mean is, if the major trend is upside, and if the retracement happens, then the bottom will be made on Tuesday. Okay, so Tuesday later afternoon, you can see a trend change, and you will again see green color candles on Wednesday, Thursday, and Friday. I hope you all remember the saying which always makes that a bad Friday or a red Friday will normally lead to a red Monday or bad Monday. And that panic will be getting over mostly by Tuesday afternoon. So you can correlate now and then you can understand. Okay. So before we get into our markets, a quick look at how the markets, okay, or can we expect the markets to behave exactly the same way as it behaved in 2008 when we had a major bear attack, like in 2026 as well. Okay, now quickly looking at a gold chart. Gold has made a high around 55,000, sorry, 5,597, that is close to 5,600. And from there, it had a fall, currently trading around 4,500, which means close to $1,000 gold has lost in the last couple of weeks. Okay, so this is a weekly chart. I have identified the or marked in green the support lines for gold and the resistance lines for gold as well, which can be used for your reference. Quickly moving on to silver. Uh, Silver also had a drastic fall after making a high of 121 or 121.6. Now it has fallen almost 50 percentage and made a low of 63 and recovered a bit, but again closed around 67.9 or 68 levels, okay, as we speak. So both silver and gold has had a dream run, and that dream run, after the dream run, we had a pretty decent correction as well. Now you can look at the levels around support in green lines to start accumulating, but we never know how the story is going to be. So be very careful. Have your stop losses. Check with your financial advisors before you get into gold, silver as well. Okay, quickly touching upon USD INR, we have mentioned the previous videos. If in case dollar crosses 92, we are in for trouble, and actually it has crossed 92 and made a high close to around 94. So, and Indian markets is inversely proportional to how the USD INR behaves. So when USD INR rises, Indian markets is bound to have a fall. So having said that, if we are going to break the 94 levels, okay, going forward, or the maximum it can go in the recent future I see is around 96.3. If in case we crosses 94 and sustains and closes above, for sure Nifty will have, or our markets will definitely have a very bad phase in the coming months. So that is why I'm indirectly saying there should not be any long trading positions, but people who are sitting in cash can slowly look for buying good quality stocks. I don't want to prolong the video too much, so I will probably release another video tomorrow on indicating how you can pick up some of the long term, how to pick the stocks for a long term, and what all things you should consider. All right. Okay, now moving on to Nifty, this is the weekly chart of Nifty. There are a hell a lot of points that you should consider. So I would request you to pause, rewind, make notes, and understand all the points and the nitty-gritties which we are going to discuss from now. Okay, so Nifty made a high of close to around 26,350, and from there we had a decent correction. If you look at it, we can see the red lines, which are the resistance lines going forward, and the support lines, which are marked in green. There are few dotted green lines, which can be considered as a short-term support, but ultimately there is a chance that we can go up to 18,840 levels or even the 17,000 levels. I will take you to the chart and explain. We will explain why I'm saying this on a point-to-point basis. Okay, but just to give you a clue. Okay, let me go to the next point. Okay, now, as I mentioned before, the solar eclipse was on 17th of Feb. From the high, or sorry, from the low of the 17th of Feb, which is identified in this chart and with a solid black vertical line, you see how the Nifty has fallen and has given close to 2,469. It's close to around 10 percentage in less than a month. Okay, that is just to give you a hint or a clue. Okay, now before I proceed to the next point, I would like to also introduce or give an idea about the Uranus retrograde which we had. Okay, if you see the dates, September 1, 2024, or in the month of September 2024 was the high which was made. And if whoever is holding a long-term portfolio, if you have not taken any actions, your portfolio from September, October 2024 would have been reduced by 50% by now, or even more. If you were in mostly concentrating in small cap, mid cap, for sure you have lost 50% of your total account value. Okay. So the high which was made on September was 26,277. From there, when it reached January 30th, okay, the low was 22,786. I'm talking based on Nifty. Now, the planets definitely have an impact on our markets. Okay. So Uranus, when it's retrograding, you will have an impact. Okay. Now, it is also known as Arun. So in generally we call it as Arun Vakri or Uranus retrograde. Okay, let's not go into detail stuff of it, but just to give you another indication, on Feb 4th, 2026, that is last month, the market made a high of 26,341, which is Nifty made a high of 26,341. And from there, it has fallen and made a low of 22,930. Okay. So imagine how much fall we had in the last 1 month. So that is basically because of the Uranus retrograde which has happened. So Uranus, which was in a retrograde mode from September, changed its retrograde and went into a progressive mode on Wednesday, 4th of February. Now, a similar scenario can happen on September 10th, 2026. Okay, going forward after around 7 months from now or 6 months from now, you can observe this date of September 10th. That is September 10th night. So our impact on the markets will be on September 11th, Friday. It's going to be a weekend. Watch the date and see how the impact on the markets based on Uranus is going to be. Okay. I hope you are all remembering the Ichimoku, which we have discussed in the basic class. Now, this is the weekly chart of Nifty in Ichimoku. If you are able to notice major point, can you see this? This is a closure on the weekly chart. 2 weeks continuously, Nifty has closed below the cloud. Okay. And this is the lagging span. This green line, we always say this is the lagging span, which is 26 weeks behind. That has also closed below the cloud, which indicates, if you look in the recent past, whenever there was a fall or a correction and the price closed below the cloud, your lagging span, okay, was not below the cloud. I think after maybe 15, 20 years, this has come to such a situation where you are seeing a close on lagging span below the cloud as well as the price below the cloud. So this is really alarming. Okay. So note down these points and see how we are going to concentrate on the other aspects of Nifty as well. Okay. Okay, let's quickly run through the charts of Nifty, Bank Nifty, at least these two major indices. If you see, we have the monthly candle, okay, and the RSI. This is the monthly chart. We have constantly having or seeing the last 4 months, we have seen the red candles, and hope you remember the record session count, which follows that the rule says if you have a number which is matching with the Fib series, that's 1, 1, 2, 3, 5, 8, that series, we already have 4 red candles. So based on the monthly we might have one more month, which is red candle, which is we are going to have to see next month also, month of April also in a red color. The RSI in the monthly is around 46, below 60, but not broken the 60 levels. Sorry, the 40 levels. Okay. Now, moving on to weekly chart, weekly RSI has gone below 40, which is currently at 32. Here also, if you observe, we have 1, 2, 3, and 4. 4 candles, which is closing below. Okay. Closing below in the sense, closing below the previous week low. So last 4 weeks, we have consecutive 4 red candles. If in case we are getting one more week, that is this coming week starting from tomorrow, and then a red candle, probably we might see a pullback. Okay, there can be a move in the opposite direction. Okay, cool. So let me switch on the Ichimoku and I'll show you what I was explaining in the slide. The price has closed below. The lagging span is close below the cloud, looking very dangerous in a weekly chart. If you go back and see, you will not see anything like that until a long time. Even during the COVID crash, okay, that was the last time you could see such a scenario. COVID crash was March 2020, and you can see the lagging span also came below the cloud. So it looks like we have some trouble coming in the future, but let's see how it goes. Okay. So that is pretty much on Ichimoku. So keep watching the Ichimoku. Whenever the price is getting inside the cloud, it will be good. Otherwise, we are in for a problem. And there can be when if the correction is going to be deeper, you will have your Tenkan and the Kijun coming also, the baseline or the conversion line coming below the cloud as well. Then only the price can go or fall to 20,000 or 18,000 levels. Okay, we will explain and see how those levels are coming up to. Okay. All right, so let me switch off the Ichimoku and I will switch on the SMA, which is 50, 100, and 200. In a weekly, the 100 SMA, okay, has been broken decisively for the last 2 weeks. If you go back and see, here it has taken a support. Here also it has taken a support. It's 2022 taken support based on 100 SMA. 2023 March taken support. Here it went down, but it didn't close that week. The weekly close happened about 20 SMA, sorry, 100 SMA. And if you see, before that, the COVID crash is when it is in 2020 March, exactly almost a similar same time frame, is when you had close below the 100 SMA and even the 200 SMA. Okay, because that fall during the COVID was very, very fast in couple of days. So if you go by that logic, 100 SMA as of now, sorry, 200 SMA as of now is having a value of 21,680. So your next support can come over here. Remember, your monthly RSI is between 60 and 40. So if it drops to the 40 level, probably you will see this kind of a figure in the coming weeks, 21,600 levels. Okay. And if this level breaks, God save us, we are in for a deeper correction. Okay. Now let me switch on the levels. I'm closing all the SMA because we have discussed the point which I wanted to convey to you. So 100 SMA is broken. Keep your SMA levels in the chart of Nifty and Bank Nifty and see. Now we will go to Bank Nifty in detail, but just to make a point that Bank Nifty is little bit stronger when compared to the Nifty. All right. So let me enable the drawings which I have for you. Now we have seen the cup shape, right? So like the cup shape, you have inverted cup shape. If you see the weekly chart where I have drawn this cup, okay, and that bottom or let me invert it for you so that you can clearly notice. You can see this as a cup. This cup has been broken. So if the cup is broken, what we normally say, the height of the cup will be your target, which means from this level, you should travel another 2,880 or 2,900 points. Okay. So, which indirectly says if the fall happens, if the level of 23,455, okay, sorry, 23,465, that is broken, we are in for a trouble, and that fall can take you to 20,500 levels. In between, there are some support lines which is identified. Okay. So if that is the case, well and good. Otherwise, we are in for deeper correction. Now, imagine this happens. Okay. This 20,000, 450, 500 levels is 23,400, 500 levels is broken, and the fall is going to come to 20,500. In between, if you have a close below the dotted line of 22,000, that is this green line. So I'm going to extend the cup like this. Okay, because if the price falls and if you get a close below this, which is close to around 22,000 levels, what will be the target? The depth of this cup, which is going to take you to 17,800 levels. This is why I said if the correction is not going to stop near any of these levels and breaks the 22,000 levels, the next target can be 20,500, which I feel will be held, okay? Because you have a big gap that needs to be filled. That also you have to keep in mind. If in case it comes and closes this gap, you might see a pullback from here. If not, if that is also broken, for sure you will see 17,809. And that may not happen in 2026. We may have a longer duration correction spanning across 2026 and 2027. Okay. So I hope you got a clear idea. You have different levels marked in green and in red. Please go through this video, write down, mark the levels and understand why I am giving you these levels. You have inverted cup and imagine if you have a pullback, okay? And then if you are getting another, sorry, if you are getting another structure like this, then it becomes the head and shoulders. So if this kind of a scenario forms, it may take some couple of weeks or months to get into such kind of a scenario. Then also we are in for a deeper correction if the neckline of the right shoulder is broken. I hope you remember all this, what we have learned in the basic class. So just to revise and just to keep you updated, I have just marked those. Hope this is clear how I arrived at the Nifty levels. Now let's quickly see Bank Nifty as well. Okay. Okay, we'll start with Ichimoku, like what we did for Nifty. In Bank Nifty, if you see the weekly chart, okay, even though the RSI has gone below 40 levels, in monthly, RSI is between 40 and 60, exactly like we in Nifty. But weekly, you notice the price is between the cloud, which means there is still a chance of Bank Nifty to bounce from this level, from the lower boundary of the cloud, it can bounce either from 52,700 levels or from 53,200 levels. So this 500 points is going to be crucial for Bank Nifty in this coming week. And your lagging span is still not anywhere near the cloud. So if it falls and comes here from whenever the lagging span comes and touches the cloud, it can have a bounce from there as well. So please have Ichimoku on your charts updated with the values for Nifty and Bank Nifty to give you a clear understanding. Okay, so I'm switching off Ichimoku and switching on the MA, which is 100, 200 and 50. So After a long time, as we have seen in Nifty, the 100 SMA has been broken. The previous incident was happened. It was on 2022. Before that, it was during the COVID time. So if in case this level is broken and we are not able to bounce back from here, then the target for Bank Nifty is going to be your 200 SMA, which is close to 48,190 levels or 48,200 levels. I hope that is clear to you by now. Okay, so quickly moving on to the levels, the same kind of a structure is there here as well. If in case this break is going to happen, you will have a fall, a decent fall, which is close to 7,000 points from the current level, which will take you to from this current level to a level which is, sorry, approximately 46,100 levels. Okay. Before that, I see there can be a support around 47,100. I'm just expanding the screen so that you can see the levels. It's on a high from the high of 61,799. We fell if this cup, as we've seen in the Nifty chart, if the inverted or this cup is breaking out, the length will be your target. So you can see a target of 8,300 points from your low. Okay, that is close to this blue line, 45,157 levels. Now let me invert the chart back to you so that if in case it comes here, then the equation changes. Then what will happen? You will have a bigger cup spanning across like this in these levels. So what is the depth of that cup? The depth of that cup will be from this level to this level, which is 16,000 points from the current level. So where are we now? We are now around 54,000. So it can take you all the way up to this level, which I have marked here, 39,000. And if that also breaks, it is going to be in the 33. But I really doubt we will break this in the next 1 year or so. But we will keep updating. Let's see how the market moves and how we are going to get or make new levels. Okay. So in short, we are not in a good shape for 2026. Okay. As of now, this structure is not there. The structure is remaining like this. So if this fall is not arrested anywhere nearby, okay, that is during the price of 53, the range of 53,500 and 51,300, immediately we will see 50,000 and then even 47,000 as well, followed by the other levels which is drawn below. Okay, so we are in very, very bad shape. 53,100 level to 52,000, you can consider it as a bouncing back level. So if in case it bounce back and then creates a right shoulder, and if the neck of that shoulder breaks, as we discussed in case of Nifty, we are going to see another correction. Okay. Now, as I said, Big Bang Nifty is better than Nifty. And why Nifty is holding on? Just because of Reliance. The big daddy has been favorable for the market. And you know, HDFC went through some bad phases. And if you go back and see the HDFC Ichimoku chart, I hope you might have exited the HDFC long position because it has closed below the cloud, as well as the lagging span is also down exactly like that. Okay. Now, just to give you an idea, this is 2026, which belongs to the year of sun. So if in case a bounce back comes in Bank Nifty, okay, that will pull the Nifty up. So in that rally, the banking shares which will be of very good move on the upside will be the PSU banks. So have Canara Bank, SBI, Bank of Baroda, Indian Bank, all this in your radar. Make use of Ichimoku, make use of the strategies that you have learned to learn in the basic class to identify which stocks, your 1334 tabs, different strategies, 1, 2, 3, 4, 5, up to 7. You have learned many strategies. So based on that, try to get into quality stocks. Okay. Okay, so what I have explained in the chart, I'm showing it you in the slide itself. These levels which are marked, and I've explained to you why and on what basis did I arrive at those numbers. Okay, so this also we have seen Bank Nifty part. Now moving on to Sensex. Sensex is also not any better than the other two indices. So there can be a pullback from the levels of 71,000. If that is broken, you will see the levels of 63, 62,000 in Sensex as well. So all in all, we are in for trouble. So be cautious, be careful when you are going to have new positions in the market from now on. So that's all what I wanted to share for this week. So please rewind, please listen to this video carefully, share it with your friends so that they are also aware of what can be happening in the markets in the coming weeks. I am not a SEBI registered research analyst. Okay, so disclaimer is that please don't use for any of your trading, this for your understanding and for your learning purpose. All right. Okay, then thank you so much and have a great day and a great week ahead. Thank you and bye bye.